Hello, and welcome back to the Without the Bank podcast. Thank you very much for being here. I appreciate it. Thank you also to those of you that have left reviews or shared it with friends. If you have not, please leave a review and please share it with a friend. That helps us get the word out about infinite banking, and I would appreciate that. Plus, once you share it with a friend and somebody else says something, maybe you're not as crazy as everybody thought you were. Okay, today we are getting back into Nelson's book, Becoming Your Own Banker, and we are going to talk about the chapter on how to start building your own banking system. This chapter is awesome. I absolutely love it, and a lot of people seem to skip over it. Well, let's be honest. A lot of people skip over the first half of Nelson's book, just like they skip over the first half of my book. And we want to dive into numbers right away. And numbers are not the only thing that infinite banking is about. Numbers are great because we can see things, but if we can't see them, it's okay also to have the concept. That's why Nelson called it the infinite banking concept. And that is why Nelson always said it's all about how you think. Okay, so let's talk about this for a minute. He really, in the beginning of this chapter, he talks a lot about beating Parkinson's law and what is the problem. The problem being that we are leasing vehicles, and he just uses vehicles as an example. We're leasing vehicles, we're borrowing from the bank, we're borrowing against a CD, which is not done today anymore, but was done back, in the 80s. And then we can use cash, or we can use the infinite banking method. And he compares in this chapter CDs versus infinite banking. Because we all know if we use cash, guess what? We lose the opportunity to use that money to make more money. So we finance everything that we buy, regardless if we pay cash or not. We have lost the opportunity, especially with a vehicle. If we use cash to buy a vehicle, we now have a depreciating asset that is not making us any money. So if that's not making us money, then it actually cost us something. Okay? Then he talks about going to a bank. Well, if we're going to borrow from the bank, who do we send the interest to? The bank. Who gets the profits of the bank? The bank. And it's funny because I just had a client before I recorded this today. I just had a client that we talked about this very thing because he is a cash buyer and he's just trying to get his head around, why would I borrow money from the policy and pay them interest? And he's short term, we're not making money. Short term, you're going to pay interest to the life insurance company. Long term, our money is in there earning uninterrupted compound interest. So long term, we're going to make more than what we're going to pay to the insurance company in interest, right? But I said, you can borrow against a CD, and I happen to reference this exact same chapter. I said, you can borrow against a CD, and then you can go, let's just say, for example, that the bank is going to pay you 4% on a CD. And that is exactly Nelson's illustration in this book. Okay. On page 45, we can go buy a CD and make 4%, or we can put that same money into a life insurance policy and make 4%. Both of them are making 4%. Fantastic. Then we can go to the banker and we can borrow money, or we can go to the life insurance company and borrow their money. If we're going to borrow against a CD, guess what's going to happen? The interest is going to go to the bank, and then the bank is going to make a profit, and they're going to give that profit to the shareholders. In a life insurance policy, that profit goes to the owners of the company because it's a mutual company. So when my company makes money because it's mutual, then I get the share of that in a dividend, right? So on page 45, Nelson actually illustrates this. And until you're 13, the CD outperforms the life insurance policy. And then year 14 on, now all of a sudden, the life insurance policy is outperforming the CD. Then in Nelson's illustration, he goes on to retirement and says, well, if I was going to borrow or take money out of my CD versus my life insurance policy, I would have less money in the CD. It would deplete faster because, again, it wasn't earning any compound interest in dividends while I borrowed against it. So we're not taking it out of the life insurance policy, we're borrowing against it versus taking it out of a CD. And so a lot of people don't understand this illustration on page 45. And it's not even an illustration, it's more of a case study. And so why did the CD stop outperforming the life insurance policy? Because of dividends. Everything in his comparison was exactly the same, except the life insurance company pays dividends. Because if we're going to borrow against a CD, that's also earning uninterrupted compound interest because we use the bank's money. So what could it be? The dividend. That is why we use mutual companies that have a long history of paying dividends. Now, in a low interest environment like it is now, I mean, thank goodness that interest rates are coming up. Y'all that are consumers are probably mad at me and saying, Mary Jo, this is awful. This is going to crash the economy, yada, yada, yada. I'm glad interest rates are coming up. Because if you've heard me talk before, interest rates are doing nothing except creating consumer debt because we're all going out and borrowing money. And it is not helping people save money. It is not helping people be smart about money. We just keep going and buying stuff. I heard somebody yesterday say, oh my gosh, the housing market's going to slow down because it's 5% interest and people are not going to be able to afford 5% interest. What's the difference if the house is sold for less and you pay 5% interest or if it's sold for more and you pay 3% interest? It doesn't matter. At the end of the day, it's the same amount of money. Remember when interest was 23%? If you are young and don't remember that, do you remember the stories? 5% is pocket change still versus 23%. We're all so spoiled and used to 2% and 3% interest, we can't even fathom 5%. Guess what? My farmers pay 5% all the time. 4% was a great deal for them. We're so used to, as a non-business owner, we're so used to paying 0, 1, 2, 3% interest. I mean, I talked to someone the other day, 2.75 on their house. That's pretty inexpensive, pretty awesome as well. And it's a locked rate. Okay, but we want to get the dividend. We want to have that money because that is ours and it comes to us income tax free. We don't have to pay income tax on those. So long term. Now, he also addresses in this book that when you start a business, or in this chapter, when you start a business, it takes some time to get going. When I was new to infinite banking, I networked with, I think I called 200 business owners in my local area, networked with them, and I heard one theme amongst all those business owners. Every last one of them told me it took them 5 years to get on their feet and really have that business making money. And since then, I have just kind of paid attention and it seems to really be the thing. It's going to take us about 5 years by the time people find out we're there and we have repeat customers and we don't have to maybe advertise so much. About 5 years. Nelson says it takes us time to start a business. Guess what else it takes time to do? Capitalize our life insurance policy. We can't expect to have all this money yesterday, right? And I've said this before, you put money in a policy and you're going to get access to 60 to 75% of that money right away. If you tell me that's not enough, then I'm going to come back to you and say, how much of your 401k did you get access to right away? And you're going to tell me none. And then I'm going to say, why are you holding this to a different standard? My goodness, not only are we giving you a rate of return, liquidity, and control, but we're giving you access to money that you would not have had in another asset. If we're going to compare, we need to compare as closely as we can. It's going to take time to capitalize. 5 years. It takes anywhere between 4 to 5 years for this thing to start to cash flow. Okay? The life insurance company needs to have the money to pay an early death claim. And it's going to take the life insurance company about 15 years before they have earned enough in their investment to pay the death claim. So another thing is if you're not healthy and they don't want to insure you, it's because if they think you're going to die in the next 15 years, they're probably not going to take that risk. And thankfully, I am glad they do not, because if they did, these life insurance companies would not be around long. Okay? They would run themselves like the bank and the government. We would just have collapsed already. They're around long enough because they understand that. We also have to understand, well, Nelson talks about the characters in the play, and that being the banker. Do you want to be the banker? Do you want to be the one calling the shots? I prefer to be the banker because I personally like dealing with myself. I find myself fairly easy to negotiate with. Okay. It's not so hard. If I want something, I pretty much get whatever I want. So I get to deal with me. I get to own the bank. I get to decide which bank I want to own, aka life insurance company. I get the dividend. These are all things that are super important that a lot of people just neglect. And they neglect this entire chapter because this entire chapter is not super duper exciting. Oh, but it is. But it is. Because it's showing us how we can put money in, how we can borrow it, how we can pay it back. It's showing us why we want a life insurance policy over an annuity, over a savings account. We just have to read the chapter. I had a client tell me the other day, he was a farmer, and he said, Mary Jo, I have all of my operating expenses through the policy, and I did not have to sell grain to pay my loan off at the end of the year. So I held it until January or February. And at that point, then I sold because I could make more money. While everybody else is being told that they have to pay that note on X day, right? So let's say that you are a car dealership today and you could buy a bunch of cars and make a bunch of money. But the bank is saying, no, we're not giving you any money to go buy any more cars because you have enough loans out there, but you can make money. I have a client that's a trucker, and he said that the bank said, no, we can't give you $10,000 for a line of credit for fuel. And he's like, but if I get $10,000 as a line of credit for fuel, I can make $40,000. This is not rocket science. The banks don't understand. They're like, oh my gosh, $10,000, that's a huge risk. Yes, it is if he can't go get any loads. He's not borrowing $10,000 to go park the semi in the yard. He's borrowing $10,000 to go buy fuel so he can go pick up loads to make more money. Hello. So he's got money sitting in his policy. Use the money from your policy as a line of credit for the fuel. Then you pay yourself back when you get your loads paid. That's simple. That gives us the ability if we're willing to build the bank. But in order to build the bank, how much of Parkinson's law are you willing to put up with, meaning do without? How much are you willing to do without to build as fast as you can? You don't have to change your lifestyle. Absolutely not. But if you don't change your lifestyle, it's going to grow faster. If you decide that you're going to change your lifestyle and work it in, guess what? It's going to grow quickly. How fast do you want to start the bank? How fast do you want your business to turn a profit? All essentially the same thing. Okay, guys, that was creating your own entity. What it's going to take, what it looks like, why we're using whole life. It was a great chapter. So if you do not have Nelson's book, Becoming Your Own Banker, again, I'm going to ask you why. What are you waiting for? Go get the book. You can get it on my website, withoutthebank.com. You can get my book, lifewithoutthebank.com, on there. You can get it as a bundle. As always, if you need anything, you know where to find me, Mary Jo at withoutthebank.com, and I am happy to answer any questions, and I am happy to help you. Have a good day.